So what's up guys, welcome back to my channel. So I woke up this morning and I came across this article. Quebec authorized a class action lawsuit against Group RESP. It may have impact across Canada. So this immediately caught my interest because it is very rare to have a lawsuit against RESP. For those of you who don't know, in Canada, RESP stands for Registered Education Savings Plan, and these are generally pretty safe investments, and you invest for your kids' college tuition, scholarships, and whatnot. So we'll dive into this article to kind of understand what it means, and also dig a little bit deeper to discover why this is a problem. So before we start, I just want to celebrate another 4 case success stories where Tony made 40% from Intel in 3 months, Peter made 42%, Aaron made 60%, and Brad made 70% from Intel within the time period you see here, which is 74 days, 1 month, and so on. So congratulations to you all. These are fantastic success stories from Investing Accelerator, and keep up the good work. So back to this article. Now, if we scroll down a little bit, I've highlighted a couple of paragraphs that I want to draw your attention to because that's basically the key message. So Quebec is targeting 6 groups of RESP providers, saying that their sale charges and enrollment fees have been charging in Quebec are basically too much, unlawful, in some cases abusive. So this is quite alarming because when you are investing, one of the most important things that you need to pay attention to is management fee. You know, if you look back 10, 20, or even 30 years ago, mutual funds used to have really high management fees like 2% or higher, or sometimes the performance-based fees. And usually, initially, the return might be good, but after deducting the fees, then it's not that attractive to the investor anymore. But of course, when they're reporting, they'll report the gross return before minusing the fees, in the past anyways. So in terms of who's getting sued, it will be Canadian CST Consultants, Scholarship Trust Foundation, and you can read the rest of the list. So if you are investing for your kids related to these RESP funds, then you need to be careful and check the fees right now. There is some sort of refund period, but we'll keep going. All Quebec residents who at any point since July 19, 2013 signed a contract with any of these group RESP providers named in the lawsuit were charged fees above $200 per plan. So this is important because based on the regulation in Quebec, it's actually $200 per plan and not per unit or per share or whatnot, are included in the class according to court documents. Of those Quebec residents, those who have canceled their RESP plan after that date and claimed they lost more than 20% of their contribution due to enrollment, sales, membership fees are also included in the subclass focused on a question on whether the charges were abusive. So when you read the second sentence, losing 20% of their contribution, which is you save $100, you lose 20 just by putting it to the plan, that is the same as paying management fee to a Vanguard ETF fund for 20 years. So you can imagine paying all that upfront will have a detrimental impact to your investing return. And that's really why I wanted to create this video, because this is basically a scam. So let's keep going. And lead plaintiff reported lost nearly $12,000 to fees. And Mr. Wang here lost $11,720 to enrollment fees charged by CST for 2 RESP plans he opened for his 2 children. And the sum is equal to 60% of roughly the $20,000 he put in. So basically he put in $20,000 and he paid fees of $11,000. And basically this is ridiculous. So if you don't know how this happened, so first we'll go to CST and understand why that is the case. So here is the fee page, and they're actually pretty upfront about it because they wrote down the fees here. Now, when I went to another website, I was trying to search another website, the fees weren't that apparent on their website. So they try to hide it, whereas CST, they just put it here for you to Google. Now, When you join the CST Advantage plan, there's a one-time sales charge of $200 per unit deducted from your contribution, used to cover the cost of the selling plan, including commission. And there's a $3 to $10 per year account maintenance charge. And there's also a one-time sales fee deducted from your initial contribution. So these two are the same. And basically, the all-inclusive management fee is also around 0.6 to 1.2%. So when you're looking at these fees, these are the all-inclusive management fee. Actually, I don't think it includes the $200 per unit because this is separated. So there are first multi-layer fees, which makes it difficult for parents to calculate how much they're contributing in RESP for their kids. So if you're a parent, you're probably exhausted, you're busy, you're taking care of the kids, trying to plan for their future, and this guy comes in and trying to sell you on this RESP plan, which seems to be a fantastic deal, of course. But then there are all these hidden fees that basically make the entire investment very unprofitable, and you're locked in for many years to come. So what's important to note here is that this is $200 per unit. This is not $200 for the entire plan. If you buy 10 units, you're paying $2,000. So you can imagine, if I'm buying like 100 units, then this is $20,000 in fees. So if I go back here, then suddenly this $11,000 doesn't seem that outrageous. But what's important here is really the ratio between what he put in versus what the fees were. So he put in $20,000 and over half went to fees. So how is that possible? So I was digging a little bit deeper. And before I jump into the prospectus, which is the detailed plan, including the fees, I just want to talk about the refund policy first. So when you sign up for a plan with us, you have 60 days to change your mind, to receive all of your money back. And after that, you'll only get back your principal minus the fees. So if the fees are really large, then, well, you lost money, maybe a lot of money in a very short amount of time. So if you cancel on the 61st day, you lose a lot of fees. Yeah, that's basically the message for this page. And now let's jump over to the prospectus. So this is the prospectus. And right off the bat, you can see the minimum subscription is $9.5 per month, which is a tenth of a unit. So if we just have to make an estimate of how much a unit is, which I couldn't really find on the website that, in a very straightforward manner, then this is $95 a unit. Now let's pause here for a moment. If this is $95 a unit, and I go back to here, is $200 a unit for the fee, then you're essentially paying 2 times the amount you put into the contribution plan as fees. So suddenly, you can realize how ridiculous this can be. Okay, so I jumped ahead and went to the 21st page or 17th page of this document, depending if you're looking at this one or this one. But if you were a very detailed, attention to detail parent, and you decided to read a 76-page prospectus, then you'll eventually get to this part on how they explain what is a unit. So a unit, the way I understand it, is basically a share. So you might buy 10 shares of that fund, or you buy 10 units. So when you're dealing with mutual funds, they call it units. So that's what it is. So how to use this table. For example, let's assume your beneficiary, which is your kid, is a newborn. If you want to make monthly contribution until maturity, it will cost $9 each month for each unit you buy, and you would have to make 204 contributions over life. So the total investment is $1,900. So this is actually the amount you invested. If the child is 5 years old and you want to make annual contributions until maturity, it will cost $210 each year for each unit you buy. So you have to make 12 contributions over the life of your plan, and a total investment of $2,500. Okay, so so far what they're describing is actually the amount of money you invest before deducting fee. Let me pull up my calculator here, and basically, if I take, let's say we do the second scenario, which is a lot easier. 210 times 12, this is 2520. So that's actually the number showing here. So let's say in this scenario, you're actually buying a unit that has cost 210. So previously I said, if you take this 9.5 times 10, that's $95 a unit. But here they're saying it's 210 a unit. So right off the bat, if you make 12 contributions, which means you buy 12 units over 12 years, your fee per unit is 200, right? Remember? So times that by 12, your fee is 2,400. So basically, over 12 years, you've paid fees that is equivalent to almost 100% of your investment. So that means your investment needs to make 100% and more before it makes sense for you to invest in these kind of RESP plans. And this is embedded in the 17th page of the prospectus, and they don't calculate the fee for you. So what they're saying here is really, so here, using this example, you can see they're actually trying to hide what the fee is, which is not very transparent. And if you look at the return for the plan here, you will see that the annual return is what? 6, 4, 0, 12, 3.5. So this return is average at best. I would say it is actually a little bit underperforming compared to some of the more simpler, straightforward mutual funds that you see on the market. So let me just bring up a Vanguard total stock market ETF. So this is VTI. Anyone can buy it. I think the fees is extremely low. Let me just bring you up here. Is 0.83%. So it's less than 1%. That's pretty good. And if I just go down here and instead of putting your money into RESP with them and you just buy this fund with zero thinking at all for the last 10 years, you would get 14% per year. So that's how straightforward it is. And of course, if you look at the very long term, like 20 years, then it's 8.7%. But if you look at something like the last 5 years, it's 17%. So obviously, this plan, the annual return, is not that great. It is underperforming, and you're paying a lot of fees. So basically, by the time you buy into it, there's no way you would get back your money. That's basically how the outrageous fee works. So basically, the key difference here is instead of charging $200 per plan, which is the entire plan, they charge $200 per unit. So the incentive here is really to have as low of a unit cost as possible, which means they're charging, let me just jump to here, $95 per unit or even $210 per unit. So the more units they divide it up, the more fees they can charge, the more money they make. So that's basically what they're doing here. That's how the scam works. And if I come down, then Wang bought 58 units, paid $11,000 in fees. So that's outrageous. And you come down here, and basically the fees are all front loaded. And the reason why this is kind of important is because it impacts the business cash flow, but more importantly, it also impacts your return. So if you invest, compound, and then you pay the fee at the end of 18 years versus you pay the fee and then you start compounding, that actually changes your return dramatically. So I'm not going to jump into the math for that, but you just have to kind of understand it conceptually. And of course, like all the scams or whatnot is non-refundable, which is what you would expect when you get into a deal like that. So one more thing before we wrap this video off is really, I wanted to search one of the other funds, but I wasn't very successful. So I went here, Kaleido, and I tried to pull up the financial documents to see if there's any like quick summary I can look at. But when I pull up one of them, basically what you'll find here is that if you or we cancel your plan after 60 days, you'll get back your contributions less the sales charge already paid. So you lose the earnings on your money. Your government grants will be returned to the government. So keep in mind that you pay sales charge up front. If you cancel your plan within the first few years, you could end up with much less than you put in. So you can see when you are dealing with long-term investments like 18 years, you're really getting into the red zone for the first couple of years, and then 5-6 years, then you'll be positive and whatnot. So they do tell you upfront, but they just don't tell you how much you can lose unless you read the fine print. So it is quite unfortunate that so many people lost money with this. And here I jump down to page 3 where you see the sales charge. And again, it is per unit. And if it is a fraction of a share, then of course they just kind of prorate it. And this represents 0.9% to 22% of the contribution. So basically, the moment you invest, you lose 20% of your contribution is a maximum. So of course, it depends on what kind of units you're buying and how much you're buying. You probably get some discounts or whatnot if you're buying a lot. So the administrative fee is 1.18%, which is high relative to something like Vanguard. And you can see the fees here is 0.83%. So that's pretty good. Yeah, so there's also a lot of other fees that are happening in the background, which we'll not dive into the detail of. But basically, if you are investing for your kids, RESP plans or whatnot, then I think it pays to kind of check the fees. Hopefully it's not too late. If you're investing with these institutions, then hopefully you can get back some of the costs, but I'm quite sure it's non-refundable. So if you're interested in learning investing and kind of managing your own portfolio instead of relying on these funds where they charge you outrageous fees, then you can check out the free training in the description below. So it will take you to my website, and there's a 4-hour free training on how to manage your own portfolio. And managing your own portfolio requires some degree of work. So on average, it takes me around 1 hour to 2 hours a week. But if you don't want to manage your own portfolio and you just want to be completely hands-off, and you just want to invest in Vanguard Total Index Fund, would be a great idea because it is probably the most hands-off version you can choose and not have to worry about a lot of things. So you can see the chart itself is pretty stable and whatnot. But overall, the long-term return is around 8%. So that's what you're going to be looking at. And if you're looking at the last 10 years, this return actually does not include the 2008 crash, which is kind of high. But if you look at this part, then it would include the 2008 crash and potentially a little bit of the dot-com crash as well. So I think if you're investing in an index fund, then 8% is what you should expect, which I think is reasonable. So yeah, that's pretty much it for this video. And if you like this kind of content, remember to give me a like and subscribe, and I'll see you in the next one.